You know, gold has been on an absolutely incredible tear lately, and it feels like that's all anyone is talking about. But what if I told you the really interesting story, the real emerging opportunity, is actually happening with the other precious metal? Today, we're going to dig into the data behind silver and ask a pretty simple question. Is it about to have its own golden moment? Okay, let's just jump right into the numbers. So if you look at the period from April 2023 to April 2025, gold just soared. We're talking a massive 65% gain. Now, in that same time frame, silver returned about 38%. And look, that's not bad at all. It even managed to edge out the Nifty index. But when you put it next to gold's meteoric rise, it looks, well, kind of sleepy. Gold has been the undisputed star of the show for sure, while silver has clearly been lagging. But the real question is that about to change? And that's the big question, isn't it? While gold has already had this huge run-up, there are a lot of indicators suggesting that silver's journey, what investors call a bull run, a period of sustained price increases, might just be getting started. We could be looking at the very beginning of a whole new multi-year trend.
So let's really dig in here. Is silver the overlooked underdog in the precious metal space that's finally about to have its day?
We all know the classic story of gold, right? It's the safe haven, the thing you buy when times get uncertain. But silver's story is becoming fundamentally different. It's not just about hedging against inflation anymore, it's about the future of technology. And that shift, well, it could be a total game changer. So let's see what the numbers have to say. So, what's the actual argument for a silver bull run? We'll start with a quick look at the past, sure, but the real compelling story is about the future, and how the simple economics of supply and demand are completely changing the game for this metal. Looking back, silver has this history of moving in these really long multi-year cycles. I mean, after that massive run-up from 2004 to 2011, we saw this long period of cooling off and just kind of stabilizing. Now, since 2022, it's starting to look like a new cycle might be underway. And if history is any guide, these trends can last for years, which means we could still be in the very early phases. But look, history is just one piece of the puzzle. The real driver today is just basic economics 101. For the better part of a decade, the global supply of newly mined silver has been pretty much flat. At the exact same time, demand has been skyrocketing. So the crucial question is, what's behind this incredible surge in demand? The answer is all about industry. Industrial demand for silver is growing at a really steady 11% a year. And here's why that matters so much. This fundamentally changes silver's role. See, unlike gold, which mostly ends up as jewelry or just sits in vaults as an investment, silver is actually being consumed. It's becoming a key, irreplaceable ingredient in building our future. Just take the solar panel industry, for example. Demand for silver from just this one sector has jumped by an incredible 64%. Every single solar panel needs silver to conduct electricity, and as the world continues its massive transition to green energy, you can bet this demand is only going to grow. And believe me, it is not just solar. The demand for silver is firing on all cylinders, coming from every corner of the modern economy. We're talking electric vehicles, 5G infrastructure, all of our consumer electronics, even advanced medical devices. Silver's unique conductive and antimicrobial properties make it absolutely essential. And these aren't just passing trends, right? These are long-term, structural shifts in our global economy. Okay, so the demand story is pretty compelling. But if you're interested in silver, how would you actually go about investing in it? There are really two main ways to go: holding the physical metal yourself or using digital investment vehicles. Let's take a quick look at both. Physical silver, like bars or coins, it comes with some pretty significant drawbacks. Right off the bat, you're paying extra costs, a premium of maybe 4 or 5% over the market price, plus taxes like a 3% GST in some places. Then you've got to worry about storing it securely, dealing with tarnish. It's a hassle. Silver ETFs, on the other hand, are just so much simpler. They're basically funds that hold silver for you, and you can trade shares of them just like a stock. They're cheaper, and there's absolutely no storage hassle whatsoever. Since ETFs seem like the more practical route for most people, let's spend a minute decoding them. If you're thinking about silver ETFs, what are the key things you should actually be looking for? Let's break down the factors to consider. All right, here's a super key detail to know before you even start. Silver ETFs don't follow your local domestic price of silver. They're benchmarked to the international price, which is set by the London Bullion Metal Association, or the LBMA. And that's why an ETF's performance might not always perfectly match what you see quoted in your local market. This little mismatch is what's known as tracking error.
It's the small, totally normal gap between the ETF's return and that international benchmark price. For instance, on one specific day, April 29th, the international silver price actually fell a little bit, but a popular ETF actually went up. Why? Well, because of its own trading activity on the stock exchange. So these small daily differences are completely normal and something to be expected.
So when you're comparing ETFs, here are 4 things you want to check. First up, trading volume. This is basically a measure of liquidity, which is crucial because it means you can easily buy or sell your shares without your own trade moving the price too much. Second, the expense ratio. This is the small annual fee the fund charges, and since it directly eats into your returns, lower is always better. Third, of course, you'll want to look at past returns. And finally, consider its volatility, how much the price swings, to make sure it fits with your personal comfort level for risk. Now, let's look at a few examples to see this in action. Nippon Silver Bs is the most popular, with by far the highest trading volume, which makes it super easy to trade, but it also has the highest expense ratio of the bunch. On the other end, you've got Aditya Birla, which has the lowest fees and the best one-year return, but it's not as widely traded. See, it's a classic trade-off between popularity and cost-effectiveness. So based purely on these numbers, a couple of funds kind of catch the eye. The ICICI Prudential ETF seems to offer a really solid all-around balance of good volume, strong returns, and reasonable costs. Meanwhile, the Aditya Birla ETF looks very compelling because of its best-in-class returns and the lowest fees. Of course, this isn't investment advice, but it shows you how you can use the data to find options that fit your own priorities.
So, what's the bottom line here? After looking at the historical cycles, the powerful new demand drivers, and the practical ways to invest, what's the main takeaway from all of this?
You know, I think this quote from Hindustan Zinc, a major global silver producer, really just says it all. The future of silver is no longer just about jewelry and investment bars sitting in a safe. Its value is now fundamentally tied to technological progress and industrial consumption. The key word here is consumption. It's being used up.
Which brings us right back to where we started. With this insatiable demands from new technologies growing every single day and supply really struggling to keep pace, is silver finally ready for its moment in the sun? Is it maybe, just maybe, time for silver to outshine gold?